visual thing, you know, everything I can be looking at is good.
Okay. I will include it back in.
I don't remember seeing this ring. It's pretty.
Oh, thanks.
Is that your wedding ring?
Mm-hmm.
It's very unique.
They had it made.
Yeah.
Mm-hmm.
They made this too, huh? What session is this? Number 10 or 9?
I think it's 9.
On you when you guys are ready.
Hello, welcome to our Money Smart for Small Business series. We're here at the Bioscience Center. This program is sponsored by the Bioscience Center, FatPipe ABQ, and New Mexico Bank and Trust. We have with us our monthly speaker, Heather Johnson, who's been so kind to teach these classes for us. This month's topic is credit reporting demystified. So we'll get to learn all about credit reporting for businesses. And we hope that you'll join us next month on September 21st, and our topic will be risk management. Take it over, Heather.
Okay. Good morning, everybody. We're going to be talking about both your small business credit report and your personal consumer report. We're also going to be talking a little bit about if you are accepting payments from customers, if you want to report them to a credit bureau, or how to manage that if they choose not to pay you back. So we're not going to go into a lot of detail about that, but it is one of the topics covered today. I don't know how many of you realize that you can pull credit bureaus on companies to see what they look like, and you can create your own credit bureau too as a company and start reporting on yourself, so that then if somebody else wants to pull it, they can know your strengths and weaknesses, perhaps a vendor you might be looking at. I've asked some business people in Albuquerque, and here we're still kind of a small town, so a lot of companies don't pull on other companies. That being said, they had wished in some instances they had pulled one because they might have realized that there were going to be troubles down the path. As banks, we pull credit bureaus on companies that are looking to borrow money. We pull both on the individuals who are applying and on the business. And also maybe if you have a large vendor or distributor that you're working with that's out of state who doesn't know Albuquerque as well, then it might also become important for you to have a credit bureau report for your business if that's something you would want to do. Reasons to do it, I think, are pretty easy, as it helps with cash flow and helps you as your business look more reputable if somebody was coming in from the outside and not familiar with the market. So to get started, as always, there's a quiz, and you can just kind of go through and see what your responses would be to kind of test if you have a knowledge. We'll just do a couple minutes for that today. It's a pretty short one.
You're not going to grade these, are you?
No, I never see them, as you know. This is for you. So as we go through this, and we'll touch a little bit about some of the regulations, it should be important to note that there are consumer protections for credit, but again, similar to banking, the protections for businesses are very different or non-existent. I mean, there are some protections. As a consumer, your credit report is very important. And there's things like Fair Credit Reporting Act and different regulations and procedures that protect us as consumers from somebody misreporting credit or helping to identify fraud and identity theft. Business reporting is a little bit different. And so it's important to check and be aware of what's being reported on your company. So big reasons to get. Perhaps you are trying to seek credit. Maybe you want to buy hay from a supplier in large quantities, and so they might pull your credit bureau report as a business to see how well you're paying. And can they give you 30 days, same as cash, before they require you to bill? Or are they going to accept cash on delivery? So that might be a reason to do this, and somebody might pull that up. You might use it as a company to pull up and say, hey, this person's on Craigslist and they're offering me hay for $3, but do they really have hay to supply to me? Is this a legitimate company? And is this somebody I feel I can do business with responsibly? So it's a protection for you to see, especially in bigger suppliers, bigger vendors that you might be using, what it looks like. And then also, as a person to report information, if somebody is slow to pay to you on a regular basis, maybe you want to put it on their credit bureau so other companies are aware, hey, this company is always slow to pay. And so you can report too on other vendors, as well as vendors can report on you to the various credit bureaus. For companies, to get a business credit report, first you get a tax ID number. It's followed under your tax ID number. And then there's something called a DUNS number, which is the Data Universal Numbering System. And you go to dnb.com and you fill out a report, and then you have a DNB report with a DUNS number, and you can pull up businesses. There potentially are fees for various subscriptions, or you can pull one off and just say, hey, I want to purchase one credit bureau report for a particular company that you are concerned about. If you want a subscription, then that would be a little bit more expensive. So, have any of you ever seen a business credit report? No, yeah, I hadn't seen one either. I'm not gonna lie, till I started looking at underwriting company deals. So this is a sample I pulled off the internet that's in your packet from DNB. And some interesting information that you learn on here and what is supplied. So based on, it's kind of similar to a personal credit score in that they kind of provide a risk rating for your company. Are you going to be paying? Are you going to be paying on time? Does DNB, based on the financial information provided, feel that you, compared to other companies in this industry, what does that look like? Because what they will do is they'll pull all of the widget makers who have financial reporting and compare you against other widget makers to see what that looks like, to see your strength. You can supply your own financials to DNB so that they can understand your company if you were trying to build up your credit report. And by supplying your financials, you can get a stronger report. A lot of these reports, unfortunately, don't have a ton of information on them. Either companies don't feel it's important to supply information, or it's just not something they do. But if you're thinking this is another way to get your business name and reputation built, it's a good way to do it. But there's also some legwork you have to do, as opposed to sort of your consumer report where everybody's reporting for you. So it looks at different things. It tells the person who pulls the report when the company was opened, an approximation of size, how many employees they have. It also tells you if there's any filings, like has this company ever filed bankruptcy? That'll be there. Any other public filings, like if they have a loan from another bank and they're saying, no, we're free and clear, you can pull this report and see, oh, they have we call it a UCC filing on all of their assets, saying that those are secured. Kind of like a mortgage on your house, a UCC filing is kind of a mortgage on your business assets, saying, hey, these belong to somebody else if something goes wrong. So those are also listed here. So it gives you also, are they paying on time? I'd say that's probably one of the biggest indicators looked at various things, is compared to the industry, how well are you paying on time on your accounts payable? Are you stretching it out, or are you paying it pretty promptly? And then based on all those factors, they give you an overall credit rating, just like your consumer credit score that is looked at. They also rank it from high risk to low risk. So high risk being a company that they feel, based on their peer group, could potentially file bankruptcy in the next 12 months, to low risk, a company that has a lot of stability and strength and is doing well compared to their peer group and probably will not file bankruptcy in the next 12 months. Nothing's perfect, nothing's 100% accurate, but that's kind of what the spectrum is and what they're looking at. Also, if you pull it directly off the website, it's all pretty in color, red being bad, green being good, and yellow being in between. Also, it will report what particular vendors have reported about a company, if they were paying on time or not paying on time. I think in a lot of things, the bad tends to get reported more frequently than the good. So sometimes it can be skewed a little bit negative, but also if you aren't paying bad, then it won't be reported to begin with. So there's that side too. Let's see, I think those are the big things that goes through who's filed on it, how you compare to other companies within your area, within the nation, and within the broader spectrum. So, does anybody have questions about what gets reported to the Business Credit Bureau and why? Consumer is a lot more interesting because that affects you much more directly. I get it. So, like I said, as a bank, why we might look for it is the commercial credit risk score. Do we think this company is going to be still here in 12 months? Are there any red flags that show, hey, last year this company was performing at this level and this year it's performing at this level? It also tells us who owns the company and tells us who other organizations that company might own. And then also, most importantly, the public records. Is there a bankruptcy filing or UCC filing? There are three.
UCC stand for?
Uniform Commercial Code.
I could Google it.
Heather, you said you could build one of these for your own
Mhm.
business, but if you're a single member LLC, is that something that you should do?
It's kind of, if you want to start building credit for your business separate from your personal, because perhaps you get to a point where vendors they can pull your credit bureau without getting for your business credit bureau without going through as many authorities and approvals to pull your personal. So they might not want to pull your personal, but they would want to pull your business. So that would be kind of a reason potentially to do it.
Because I can see a lot of the stuff is not going to be on my
Right.
personal.
Right.
And there's a lot more good stuff on business than the high-end stuff. Okay.
There are three business reporting agencies: D&B, Dun & Bradstreet, which is the sample I've provided, Experian, and Equifax, which are also known for doing your consumer as well. I think mostly for business, people pull the D&B. I've never seen an Experian or Equifax business report. So, if you are a business that wants to pull credit, you have to get permission from the people who are pulling it, and you have to have a permissible reason. You also can't share your credit report with somebody else. So, and frequently this happens at the banks. People come in and we say, unfortunately, we're unable to provide you credit for these reasons. We are not able to provide a credit report because we are not a credit reporting agency. They have different regulations they have to follow. They have different steps they have to take. So what we do is direct you back to the company, and they will provide it to you free of charge. So if you are somebody or a business that pulls credit, you can't share it with anybody else. And you need to follow certain regulations. A good idea is to make sure you have some sort of written signature saying it's okay that you pulled my credit.
From somebody in the business that you want to check credit of.
Well,
Somebody
individuals. This is going back to individuals.
Oh, okay.
Like, for
Okay, so-
instance, an apartment, perhaps you have renters for a house you're renting or an apartment. You can pull credit and go through a consumer credit agency, but you can't share it with anybody else. And it's a good idea to get some sort of written authorization saying, I am aware that XYZ apartment complex is going to be pulling my credit.
You can't even share it with the person whose credit you're pulling?
You're not supposed to.
So if I was gonna rent a place, I could pull my credit and take it and show them if I wanted to. But they're gonna pull it anyway,
Potentially, yeah.
and they can't tell me anything.
They're not supposed to.
Why is that? Well, I can't, no. It's none of their business. I don't want them analyzing it and trying to figure it out. Okay.
So if you are somebody who's going to be pulling credit, it's just important to know that there are legal regulations around it. There are also companies that do this that you can go to. They have other services as well, perhaps background checks, things of that nature, and they can do all of that by knowing the regulations, because things change.
Okay.
Something I thought that was interesting, I didn't know, is credit reporting agencies, for you to pull directly from them, you have to have a retail location. So if you work from your home, that's not considered a retail location and you can't pull a credit bureau report. You have to have a retail location. So then you have to go through one of these other companies that can assist you with that. So I thought it was interesting. So, what are some of the reasons a business owner may have for reporting consumer credit information to a consumer reporting agency? Why might you, as a business owner, say, hey?
Maybe they didn't follow through with what you purchased from them or something?
Mm-hmm. Perhaps they didn't pay their rent. They have debts collected, medical collections hit credit reports a lot.
I've been hearing that from people when I'm out and about and hear conversations off in the distance a little bit. There's a lot of that going on here, apparently.
Mm-hmm.
You get sick, lose your job, and you can't pay the hospital.
Mm-hmm. Medical bankruptcy is a big thing.
Yeah, it's devastating, I'm sure.
So it can help you manage risk for your company. And managing your own consumer credit helps you manage your own personal risk. So companies and banks look at certain ratios. A big part of your credit score is actually ratios. So one big ratio is called debt to income. Companies look at about 45% debt to income. So they're saying your monthly payments for your house and your credit cards and your car payment should be no more than 45% of your total monthly income. Some companies look at gross before taxes. Some companies are a little bit more conservative and might look at net after taxes. Typically it's gross, but that's a rule of thumb. My dad always told me that it should be no more than 36% because he liked to be ultra conservative. And I think back in the day that was the rule of thumb for credit card companies and mortgage companies, was a 36%. So DTI, debt to income, is one of those things that can kind of change as banks and mortgage lenders want to become more conservative, like what happened after the crisis and the meltdown. It became harder to get credit. They can increase those ratios or decrease them depending on what they're looking for and the credit. So debt to income is a big one. Another ratio that's important is how much total credit is outstanding versus how much your card is. So if you have a $10,000 card and you have outstanding on it $8,000, it's going to reduce your credit score. If you have 2 cards and you're able to get below, so maybe you have, can get under that 50% per card, even though you have 2 cards, you have a better credit ratio to debt. And so if you can spread it out, it helps your credit score as well. Because how much you have borrowed versus how much total debt you have is important. Because that's another ratio that they look at. Not that I say you shouldn't pay all of your bills on time, but you know credit cards are going to report to a credit bureau agency, and potentially your utility company might not report until you're 30 days late or 90 days late or a significant amount of days late. So, you know, look at who's going to report to the credit bureau and pay those first to help boost your credit score. So that can help you as well. As a business owner, if you start reporting late payments, you might also see that your customers start paying you on time as well. So thinking about it on the reverse side of both being a business owner, if you report to the credit bureau, they might be more likely to pay you. If you are going to report to a credit bureau, go through a third party so that they can follow all the rules and regulations for you and that you don't have to keep track of that. That might be something if people don't pay for their marriages, you might want to put out there.
Yeah.
Although I would be getting payment in advance.
Yeah.
Yeah, I haven't figured all that out. One thing, I kind of hate to go do an elopement for a couple in a place that might not be seen by a lot of people.
Mm-hmm.
Maybe a vineyard off over there or something, and have something happen to me. So I haven't figured out how to wrangle that in yet. Because if I do a $600 wedding and I have $600 cash or credit card, one of those little things on the phone, and somebody hits me over the head and takes it, you know, it's like, ow. I don't know how I'm gonna work that out, because the celebrities I did along the coast in LA paid me cash, and they picked me up and drove me. I had a limousine from one to another and back.
Mm-hmm.
I was safe. I wasn't afraid, but several people here have brought it up. How are you going to keep yourself safe if you're taking money and you're out and about? I don't know.
Hopefully you know your couples pretty well before you marry them. You know they're a safe bet.
Hopefully, yeah. Yeah. But if you just decide Friday night that you want to get married next Tuesday night and you call me and we set it up real fast, I'm not going to know you.
Mm-hmm.
Which is basically the idea. So we'll see. It's a question.
If you report to credit bureaus, they do have certain requirements. We kind of talked about this a little bit before, but you need to keep everything under lock and key. If you're going to have social security numbers, there are certain requirements for doing that. You know, legitimate business location with secure locks, separate office rooms with secured filing systems, secure computers, and security procedures. You can't just have people's credit reports lying around. That's a big no-no. Big no-no. I mentioned companies that do business, they'll also do background checks. I don't know, maybe that's something you could look into, because they can turn them around kind of fast sometimes. I don't know if I'd do a background check for getting married, but it might be an idea. A different way to do that. Fair Credit Reporting Act, as I mentioned, for consumers. The Fair Credit Reporting Act governs the collection, assembly, and use of consumer report information. So it sets forth legal requirements for your business and all aspects of credit report processing. And again, this is primarily for consumers. This is protection for consumers, so there aren't misreports on the credit bureau. It also protects you as a consumer so that you can look at your credit bureau report. If you decide not to do business with somebody because of their credit bureau, you need to list specific reasons, and then they can call the credit bureau agency and get a credit report from them. So, and there are also time frames involved into once you pull the credit bureau report and making a decision, and really, all of that, there's also guidelines around timing. So if this is something you're going to take on, really do your research into it.
It's not something to mess around with.
No.
lightly.
There's also the Fair Credit Billing Act. And what this does is it's primarily for things such as credit cards. But if you call your credit card company and say, hey, you know what? I have a charge on here for Walmart and I didn't go to Walmart last Friday. It starts the clock and they have so much time to do research. It also starts a clock for you that you have to provide certain information. If they come back to you and say, hey, we need to see this, you also need to do that. So the Fair Billing Act does that. It also gives you so much time from the time you get your statement. How important is it to actually open your statement when you receive it? Because again, all of these clocks start. They're saying, we sent you the statement, and you're saying 6 months later, I just reviewed my statement, then there's a charge from Walmart. You want to review your billing regularly, because if there is something that you want to argue, there are time limits around it. There's time limits on both sides. There's time limit that the credit card has to research it and get back to you within a number of period, and there's a time limit that you have to report it.
Makes sense.
Yeah. So, if you are going to be handling personal information, how much reputational risk is there on the line if the news report says all of a sudden that 10,000 social security numbers were released into the world? Yeah, it's a big deal. So you need to make sure you have some sort of software that can be set up to protect your information on your computer. You need to make sure your house, you're doing everything that you're supposed to be doing. And even if you're not collecting social security numbers, maybe you're collecting addresses, you still want to shred and take care of people's information as though it's your own. That's kind of the bottom line. Treat people's information. You wouldn't want it out there any more than somebody else would. So why is your personal credit important to your business?
Because people are going to look at you and wonder in the real world if you're reputable.
Mm-hmm.
Yeah. If your personal life is a mess, it might not be the right choice to do business with.
When you go to a bank and ask for credit for your business, if you own more than 20% of a business, especially in the beginning, you will be asked to guarantee the loan.
Yeah.
And what that means is, if your company is unable to make the payments, the bank is going to look to you personally to do it. SBA also requires personal guarantees on any SBA loans. So it's important to understand, and they might ask you to put up personal collateral to help secure your business loan. So you need to think strongly if your personal collateral, be it a home or car, if your business goes up, are you going to be able to keep those? Because they look at all assets available. And when you're getting the loan, it's all excitement. Yeah, I want the money, and yeah, I don't mind. But then when the loan's going belly up and you're not able to pay, that's when you start realizing what's really on the line. So your personal credit will impact your business. So if your personal credit score, just like your business, will help you or hinder you get business credit. That's just the bottom line. The bank's going to look at you as a person and see how have you paid your debts in the past. And what capacity do you have as an individual to pay your company debt? Do you have low debt to income that if your business were to not be able to pay, that you have the resources to be able to pay the loan? Does that make sense?
Yeah.
So, and have you in the past, prior to setting up the business, paid all of your debt appropriately? So there's some ways to help improve your personal credit score. Start paying all of your bills on time. And it's amazing how quickly you do that right away. It helps repair your credit history. I'd heard a trick that if you pay your credit card, let's say your monthly bill is $500 and you pay twice $250, it helps. It shows a higher willingness to pay. It's the same dollar amount, but it shows your willingness to pay off the credit.
That doesn't make sense to me.
If you pay off a credit card, don't close it out automatically. Because again, going back to those ratios, that you want to be able to show I have $10,000 of credit available, but I've only used 1,000 of it.
But if your payment is $500 a month,
Mm-hmm.
and you send $250, and then later in the month send $250,
As long as it's before the deadline.
you're still paying the same amount, but that they're looking at that as you're more willing to pay it off faster.
Mm-hmm.
Huh, something in my brain isn't.
No, I mean, some
Getting
things, you hear these things, and maybe it's true, maybe not,
I'm
but
gonna test it out.
you test it out.
Yeah, let us know what you find out. That's curious.
So everybody also has heard, don't pull your credit bureau report because it's going to ding your score.
Right.
So what the credit companies are looking at there is, and this actually happened to somebody. He was fresh out of college, didn't understand how credit bureau reporting worked. He's actually a banker. We met in training. And he went out and tried to apply for 15 different credit cards at once because he assumed he might get accepted for one or two. It tanked his credit score so fast because what people thought, what the reports thought was that he was trying to quickly apply for credit, get as much as he could in a short period of time. That wasn't what he was trying to do. He was trying to hedge his bets and actually get one to accept him. But if it looks like you're trying to get $100,000, there must be something wrong or some kind of thing.
Sort of fraud.
Some sort of fraud. I think it's like 3 credit bureau reports in a month. There's lots of credit card companies now that if you sign up for their credit card, you can get monthly monitoring of your credit report for free.
Doesn't Credit Karma do that? I mean, I
Credit-
get my monthly email to
Uh-huh.
check my credit. Is it bad for me to go and pull that?
No, I don't think so. And like if you're purchasing a car or a credit company and see, okay, I had 3 car dealerships that pulled credit within a certain time frame, okay, that's not that big a deal. Someone's trying to buy a car. Kind of the same thing if
There's
you
that
apply for a
commercial,
mortgage.
Is it Credit Karma that says they're sitting on a bench, 2 girls, and one says, "Oh, if you want to go buy that, check your credit."
Mm-hmm.
Like, we should be doing this weekly or something. You know, it's kind of how it comes across to me. And I am thinking back 40 years, going, "Oh, wouldn't that ding it bad?"
Yeah, no, it doesn't ding it bad.
Just that you want to check your own credit.
Mm-hmm. That doesn't ding it. It's again, are you trying to get a mass amount of credit in a short period of time?
If you're not asking for credit, but you just want to check your own credit,
There's different, yeah,
it's not going to ding it.
it's not the same. And there's lots of services, Credit Karma, that do it. So there's also, like I mentioned, and it's on page 16, annualcreditreport.com. That's another service. They
No,
claim
I have a bank that does it for me. Though.
your bank does it, yep. So it's become like a cool thing to do right now, to check your credit score and see where it's at. And it gives you a little green and yellow bar, just like this one that says, hey, green's good, it's over here, red's over here. And again, people might ask, well, what's the credit cutoff or what's the magic score? And that's something that credit companies change depending too. It's various times. So there's no magic number. And different banks and different credit facilities have different requirements. So, but it will affect your pricing. It may or may not affect as badly how much or an ability to get credit, but it will affect how much credit you can get and the pricing on the credit. So a credit score could be more costly for your business if you're applying for credit, because it would be harder to get, and you might not be able to get as much. So advantages of a personal guarantee, you're able to get the credit, whereas you might not be able to without the personal guarantee. If you have a good, clean credit report, you're probably going to get a lower interest rate, potentially different collateral requirements, and it has the big SBA loan program that they do require a personal guarantee when doing an SBA loan. An SBA loan, just so you understand, you do not go to the SBA to apply for a loan. You go to your bank, and then they see if you qualify for traditional credit or SBA credit. And what the SBA does is they provide a guarantee, but they're not actually making a loan to you. They're going back to the bank and saying, we're going to guarantee Kimberly.
They're going to back me.
If she doesn't pay, we'll pay you back and make you whole.
You have to be careful because they have prepayment penalties.
Mm-hmm.
They have what?
Prepayment penalties.
The SBA?
So you can't be a great customer and pay off your loan without a penalty. Pay off your loan early.
Yeah, depending on, yeah.
I'm struggling with that right now.
They also, it's considered government debt, so also if you have student loans or if you don't pay off your SBA loan, you default on that, it could affect student loan debt in future for different reasons. So it's also important to consider. It's government debt. So reasons that it might be disadvantageous to become a personal guarantor, it does put your personal assets up to the bank to be a source of repayment, which could include your home.
Mm-hmm.
Now, also, if you are unable to get a loan, you could perhaps add somebody as a guarantor. Banks can't go to you and say somebody specific. We're not going to go to you and say your parent needs to guarantee or a spouse, or there's none of that. It's up to you to determine who else might be credit worthy. But whoever that person is also needs to understand that they're
Putting their life on
they're
the line.
putting their name on the hook.
Yeah.
So So what challenges would you say you have as being a personal guarantor?
Losing everything. You gotta be pretty confident that you're gonna make a really good go of it.
Mm-hmm. Well, I'm not necessarily confident, but I think you also need to understand, and you should have a good banker who can help you understand what capacity you can truly borrow and understand so that you can pay that back and not put you in a situation where you're taking out too much debt to what you can truly repay. There's
So-
always a risk.
And that goes to talking about building that relationship with your banker.
Mm-hmm.
Because if your banker knows about you enough, it can guide you.
Mm-hmm.
But if they don't really know you,
It's harder to
they
make
really
those.
can't. Okay. There's a lot of reading in this paper.
It was kind of an interesting class, and we're almost to the end. I thought it would be a little bit more about how to read a credit bureau report and a little bit more about managing it, but it's actually more, and of course it's for business owners, so it's a lot more about how as a business owner you can utilize credit and get credit for your vendors and get credit as a business owner from other vendors.
Well, this is quite the thing to have to study all week.
Some light reading.
Yeah.
So 5 key points to remember. As a small business owner, your personal credit is going to affect your business credit. That's just the bottom line. So the handling of your checking accounts and your personal loans affects your ability to borrow as a business. It also affects your terms with your vendors. If you're going to be cash on delivery or they're going to give you 7 days or 30 days to pay, it's going to affect that. So if you're trying to get be able to utilize cash, it's good to be able to get your vendors to give you longer to pay them. It's important to understand also how to pull credit and also how to report credit. You can establish a credit history just by starting to file your information with Dun & Bradstreet. Or Experian Business and Equifax, but there's all three.
Is there a point at which in starting that, or a money amount that I should be making before I start to think to do something like this?
I would think, you want to be well established as a business, and you want to be, because also, again, it's comparing you against your peers, and your peers probably aren't startups, they're probably established companies.
Yeah.
So looking at the fact that you're a stable, established company. If you grant credit to customers, you want to look into their credit history and also report on them. There's laws around that. And so, again, just to always follow those laws, because as consumers, there's a lot of protections out there for us. What questions do you guys have?
Well, speaking on that, would somebody, if I had done something and told a customer I'm pulling your credit for some reason I can't think of right now,
Mm-hmm.
what could they say I've done wrong to them? What kinds of things would come up?
Well, if they didn't give you permission to pull credit, but you had credit, that would be one thing.
Okay.
If you report misinformation, that would be another thing. If you share that credit bureau report because your cousin is good friends with them,
Oh, yeah. Mm-mm.
that would be a big no-no.
Yeah.
You go to the neighborhood association and say, hey, did you know the Joneses? Here's their credit report. Yeah. That would be bad. So,
Okay.
treat other people's information as you would want it to be
Right.
treated, which is, you don't want it out there.
No, everything I've ever done under lock and key
Mm-hmm.
and no talking.
Kendra, do you have any questions?
I don't think so. I just know I need to fix my credit.
There are individuals and individual companies that can help provide credit counseling. Once you pull your credit report, that's always a good first step, and then see what needs to be done.
Who's better at providing real truth help for that? Some of these TV credit fixer-uppers, or, who?
I would try and find somebody local, I think. If you're going to go with one of the big TV companies, I would see what they charge, and I would also read a lot of reviews on them online before you do. Because I think sometimes an effort for them to help credit, I've heard a lot of instances where they've made it worse.
Well, who does this sort of thing? Is there somebody in the phone book under credit counseling?
There are some, I feel like there's a local not-for-profit that does it, and I'm trying to remember.
Who helps with that?
But
I only know of a person who helps you resolve medical billing errors. I don't know of anyone who helps with personal credit.
okay.
I did that after my divorce, but my banker referred me to the person, so.
But it was a private person that
I
had
mean, it
a
was a
small
company that
business
did it,
doing
but-
that? Oh, a
Yeah.
company, okay. Local, and you could actually go face
But
to
my
face with
banker
them.
referred me to them, and it was really helpful. I recommend it for sure.
Okay.
And I went to Exxon and I got a $200 loan that just paid itself back. But I went to them to go and use their services, but they helped. They pull your credit and sit down with you, go page by page and tell you, fix this, don't worry about that, send a letter to this company, that kind of stuff.
Okay. Got it.
And I think a key to, or what I've always understood, is it's better if you're calling your credit card company and saying, hey, I need help, as opposed to a third party. They're much more likely to negotiate with you personally than somebody else.
Yeah.
So,
My credit counselor helped me compose the letter, but then I would sign it or whatever, so.
right.
Just because they know the terminology and correct way to ask for things, but.
That's awesome.
Mhm.
But you could learn
Mhm.
from that whole experience.
Mhm.
Very cool.
Okay, well, if you guys will do the post-test and assessment.
Did we talk about number? We didn't mention number one.
What was number one?
Which of the
Let's go
items
through.
listed will not appear on a credit report? Unpaid lawsuits, employment tax liens, credit ratings score, or former alias.
All of those will appear on a credit report.
I would think so.
Mm-hmm.
I've got aliases at the union.
And 5, while I said there were specific laws, it's C, both A and B. If you obtain a consumer credit bureau under false pretenses, you could be fined and imprisoned up to 2 years.
Yeah, I can see that. I would think that's rather important.
So Heather, when you were saying about the debt to income ratio
Mm-hmm.
and the monthly income compared to, they're going by your last year's tax return? Is that the money, the income money that they're going by?
Yeah.
Do you want this?
Mm-mm, it's
Oh,
free.
okay. But you want the,
I want the evaluation.
Eval.
test. Yeah. So, right. What a bank will do is they'll pull your credit bureau report as of today, and then they'll use your income from 2016 off of your tax return, and then see how well can you pay those debts based on. If something has changed, like let's say you get a new job, then they might look at a W-2 or a letter from your employer saying, hey, this person now makes X amount of dollars because you got a raise. But typically it's off of the previous year's tax return and W-2s.
I think we're done. We'll see you guys next month.